All right, hi guys. Welcome to the FutureLab Introduction to Cryptocurrency and Blockchain. For those who don't know, FutureLab is essentially an online mentorship platform where you can go online and chat to people who may have information that you want to learn, right? Whether you're a student, whether you're an entrepreneur or professional, there are always people you can talk to learn things from. And today we have Bobby and TM here from CoinGecko, and they'll tell you a little bit more about cryptocurrency.
Okay. Hi everyone. So today we're going to do a webinar on the topic of Bitcoin, Introduction to Cryptocurrency and Blockchain. So this is our first time doing a webinar with FutureLab, so we're not exactly sure how well-versed you are in this topic. So in this presentation, we're going to try to pack as much information as we can, just to give you some idea about the space, and hopefully that will be good enough for you to be interested, and you'll be able to follow up and find out more information, or if there's interest, we could do follow-up sessions regarding this topic. So without further ado, so I'm TM, and my partner here, Bobby. So we are from CoinGecko, and we'll be giving a talk on this topic. So CoinGecko is a cryptocurrency data website. So if you come to our website, you can see a range of different data points for all the cryptocurrencies that are being traded out there. We have price, market capitalization, liquidity. So if you're interested in knowing about cryptocurrency, you want to check out our website. So enough about that. So we're going to start talking about, so the way we're going to structure this talk is the first part I'll be covering mainly about Bitcoin, cryptocurrency, and blockchain stuff. And then later on, I'll pass it on to Bobby, which he will talk more about investment in Bitcoin and how to trade, how to buy them, the economic side of things. So yeah, I'm going to start this presentation by talking about Bitcoin. So it's very important for us to find out how transaction of money currently works. So if Alice wants to send some money over to Bob over the internet, the only way that she can do that right now is through a central authority, like a bank or a clearinghouse and stuff like that. The problem here is that whenever there is a single point of failure in the bank, that is, if there is an identity theft or there is a hacking incident, or maybe like the bank's charging some fees, it will be much more ideal if there's a way for Alice to send money directly to Bob without going through a central authority. And it turns out the technology is here that she can do that, and that is called Bitcoin. So Bitcoin is created by an anonymous entity called Satoshi Nakamoto, and it basically allows the exchange of money electronically without a central authority. So as an end user, when you use Bitcoin, basically you are going to download a wallet application, and then you will say, I want to send $10 to Alice, for instance, and then hit send, and the money will just transfer from his account to her account without going through like a bank, for instance. It goes directly to her. So how does this all work, right? It just works like magic, right? So we're going to spend some time stepping through how a Bitcoin transaction really works. So in the essence, the Bitcoin doesn't have a physical representation. There is no physical gold, there is no paper money and stuff like that. All you have is just a ledger with an account number and a corresponding balance. So say, for instance, we assume that the first row is Alice's balance, and the second one is, the one at the bottom is Bob. If Alice were to send 1 Bitcoin to Bob, what will happen is the ledger will get updated. So if Alice sends 1 Bitcoin to Bob, we'll credit her account and we'll debit Bob's account. So this number on this ledger here is actually not backed by any government, company, or even gold. If you were to go to the bank and say, hey, I have this balance, can I claim some US dollars from you or some physical gold? They're not going to recognize it. So this value on this balance is derived from the people's belief in the system. The belief that this Bitcoin system facilitates trustless transaction, and it prevents people from having unfair changes, which means that they can't spend the same money more than once. So how does that go about, right? So the ledger that we saw earlier, there's actually a bunch of this ledger being copied all over the world. So there are different computers running the Bitcoin software all over the planet, and each of them have the copy of this ledger, which maintains the balance of everybody's Bitcoin wallet. And what would happen here is, when Alice wants to send 1 Bitcoin to Bob, you can kind of imagine that she's taking out a Bitcoin check, and then she says, I want to send some money to Bob, amount of 1 Bitcoin, and then she can use her private key and sign this check. So instead of taking this check and going to a bank, what she would do is that she would broadcast it to the world. She would broadcast to everyone who is running this Bitcoin software and says that I want you guys to know that I'm doing this transaction. Please go ahead and update the ledger. So all of them got informed about this new transaction that's coming in, and they will all go ahead and update the ledger, where they'll find Alice's account number and credit it and debit Bob's account. But now there is going to be a problem, right? Because all this transaction goes through the internet, there's going to be some latency, some delays, and we're going to start to realize that everybody is holding a different copy of ledger. So when everybody has different copy of ledger, who do you trust? Like, who do you trust in a sense that which ledger is the most correct form of that reflects the current state of the balance? Because in the normal case, a bank will be the only one who maintains that single ledger, and that is the source of truth. So apparently, the way to find out which is the true ledger is through a vote. And the voting process is a little bit special here. It doesn't depend on how many accounts or how many email addresses you got. If that's the case, then you could actually create like thousands of email addresses and cast as many votes as you want. So the only way to participate in the vote is to use electricity and computation power. And the reason why you need that is because it's the ingredient that you use to solve some sort of a mathematical puzzle. Okay? So now we can start to dive into what blockchain really is. So, a blockchain is really literally just a chain of blocks. So as you can see in the diagram here, I got these blocks, and each block has a bunch of transactions in there. So you can think of a blockchain as a timeline of history of all the transactions that has happened over time, and these blocks just keeps going one after the other and keeps getting added on top of the chain. So when Alice sends Bob a transaction, then that transaction itself will probably sit somewhere inside the block. And if you recall earlier, I was showing you a ledger. So that ledger itself is actually an aggregation of the current state of the blockchain. So the blockchain consists of nothing but just transactions. And you will be able to get the balance of everybody's account just by summing up all the transactions that has taken place. So now that we have this blockchain here, you know, when new transaction comes in, how are we going to include that transaction into the blockchain? In order to do that, the computer needs to solve a cryptographic hash function puzzle. And the way that puzzle works is, imagine you have a function, some sort of a mathematical function. You know the answer, like you know the answer that you want to achieve, but you don't know what parameter to put in there. So the only way for you to find that out is to keep trying. So you feed in a value of 1 into the variable, and you get 300. So it's not 789, you retry again. And you feed in 2, and then you get 932, you retry. So you keep retrying until you try to find the solution of 789. So that's essentially how the proof of work puzzle really works. So when somebody keeps trying and trying and trying, and they found the solution, they will go ahead and broadcast that solution that they found to the network, right? And so you can think of that puzzle as like a Sudoku. A Sudoku puzzle is really difficult to solve. Like it may take you hours to try to find the answer, but then it's really easy to verify. If you toast the Sudoku solution to someone, they can just verify that you did it correct in less than a minute. So that's exactly what's happening. You found the puzzle, a solution to the puzzle, you toast it off to the network. The network kind of verifies that, okay, you have found the solution, and I'm going to take it that you did the work in order to verify the transactions. So once the solution goes out there, a consensus is reached, and everybody will update their ledger according to the version of the person that has solved the proof of work. So this is how consensus is reached. And once this has taken place, new transactions in the Bitcoin world will start pouring in, and the whole cycle repeats itself. So I'm going to highlight a few important things about blockchain and proof of work. So one attribute is an immutable history. So people always say that whatever is in the blockchain is immutable, like it's permanent. So why that is the case? So imagine I have this original blockchain here, and I have the second one, which is tampered. So some hacker tries to erase some transaction from the past so that he can get his money back. But then when you do that, because this thing is a chain, like one block has to build on top of the other. So if he make some changes here, it becomes very obvious that this chain is invalid. So if he tries to go to the network and say, I want you guys to update your ledger based on this version, nobody is going to listen to him because this chain is invalid. So the only way for him to convince everyone that this is the true ledger is that he needs to create his own blocks. So he needs to do the work, the proof of work, all the way to a point where it's longer than the current chain. And with that, he can prove to the others that he has done the most work in terms of solving the puzzle, and then everybody will have to update the ledger. But the chances of this happening is really, really low, and that is why people kind of give the attribute that blockchain is immutable. So another two important things about the proof of work is that there is no pre-solving. So the Sudoku puzzle that I told you about is that it is impossible for you to solve the puzzle ahead of time. Like you can't solve a puzzle that is 1 year ahead because the puzzle depends on the previous block of the blockchain, and it depends on the transactions that come in as well. And there is also no mathematical shortcuts. So you can't find a mathematical genius to come up with a way to find a solution to that puzzle. The only way for you to solve it is to keep trying. Try and error is the only solution. And this gives you an assurance that the Bitcoin blockchain is fair, right? And it doesn't come from a single entity. So it's very unlikely for a single person to find the solution to the puzzle like 5 times in a row. This gives you some sense of randomness in the network. And so let's talk about money creation. So how Bitcoins are created in the world, right? So when a solution is found during the proof of work, so what's going to happen is that there's going to be a treat, like a reward, that is being added to the solver's balance. And this acts like an incentive for them, mainly because when you are trying to solve the proof of work, you have to use electricity and computational power. And that's going to cost you some money, some resources. And the way to compensate for that is to reward them with Bitcoin. So this process is called mining. And these guys are not actually like mining for money. They are actually securing the network by maintaining the ledger. But at the same time, they get rewarded with Bitcoins because of the stuff that they have done. So why this method is used to create Bitcoin is because the solution that is being found for the proof of work is quite random. So it's one random great way to distribute the Bitcoin over the world. And by 2140, there's not going to be any more Bitcoin being created. So at that time, the miners will only get paid through transaction fee. They're not going to get paid through new Bitcoin that's going to be created out of thin air. So just to recap, what I just described earlier on how Bitcoin actually really works is that you can think of it as Alice writing a check to Bob, and she will sign that off. And instead of sending it to a bank, she will broadcast it to the whole world. So the whole world knows about her intention. And when that happens, all the miners in the network will start to solve the proof of work based on the transaction, to try to include her transactions into the ledger. And the person who found the solution to the puzzle first will be able to convince the rest of the network to update the ledger to achieve consensus. And the guy who found the solution will be rewarded with new supply of Bitcoin. So when new transaction comes in, this process recycles again. So that's how this whole Bitcoin cycle of transactions really work. So So we can see that Bitcoin itself is an interesting like setup, right? It allows decentralization of transaction of value, right? So I would say that Bitcoin is the successful implementation of using blockchain and implemented a decentralized payment system. But the problem now is Bitcoin has gotten really popular to a point where the market capitalization has reached like billions. And security is really important because lots of people are heavily invested in this currency. And as a result of that, Bitcoin becomes a little bit difficult to innovate, and it's really risky to introduce new updates to the software. So the only way for people to try new experiment is to launch their own version of Bitcoin, right? They'll launch a similar cryptocurrency with a different brand name, and they may, change some parameters here. They may, change the number of coins, change the economic attributes. Some of them come with new features. So there will be all these coins that have very, very different features that are being launched. But people start to think that, decentralization shouldn't only apply to value transfer. It can also be applied to a bunch of other real-world use cases like storage, identity, even enterprise want to have their own blockchain. So we start to see an array of different currencies that are being created, different initiatives. And the last one I want to highlight here is platform. So this platform allows people to build application on the blockchain, which opens up way more possibility than what we initially know about. And yeah, so this kind of highlights the landscape of cryptocurrencies. So initially I was talking a lot about how Bitcoin transaction really work and how that kind of motivates the creation of all these different cryptocurrencies. So now, with the existence of platform, we start to see a lot of innovation in the space. And one popular trend that we are seeing now is the launch of initial coin offering, or ICO. And yeah, I'm going to pass that on to Bobby, where he will take on from there, and then he will go into the other aspect of trading and the price part of the cryptocurrency. All right, thanks.
Hi guys, my name is Bobby, so taking over from TM from here on. So TM touched a bit about these different coins out there. So at this point in time, there are about close to 1,000 over cryptocurrencies in the market. Most of them, as you said, there's a lot of different rules and all. We're going to focus a lot on these platform features here. So one of them, the biggest one, is Ethereum. Did not talk a lot of Ethereum today, but one of the things that one of the huge trends that we have seen this year in 2017 is the huge interest in initial coin offerings. So initial coin offerings are basically an unregulated way of fundraising. It's very similar to the initial public offerings. So if you can imagine an IPO where companies that are already established, they have shares in the market and they are looking to raise funds, they sell a portion of their shares to the public and they raise funds, and then once these shares are sold, it's tradable on exchanges, and there's a price and there's a valuation of the company, and that's how it goes. Similarly, in cryptocurrency, in blockchain, cryptocurrency projects, a lot of them are funded via this thing called initial coin offering. So what happens is that cryptocurrency project guys, the project organizers, they will say, I will create like 1 billion coin X, and I'm going to sell like 60% of these to investors worldwide and raise some money out there. And the way that money is being raised is via cryptocurrencies, of course. So it's raised mostly via Ether or via Bitcoin. So most of these ICOs are created on top of the Ethereum platform. Why it's one of the killer applications that blockchain technology has seen this year. So as you can see, this is I guess it's a bit not so clear on the screen that this is basically a chart of the amount of money raised via ICO from January 2014 up to around August, September this year. You see that ICO is not a new phenomenon. It's been around since the early days of cryptocurrencies. In fact, one of the most successful ICO that's been created was Ethereum itself. Ethereum ran an ICO in July and August 2014, and they raised a total of $18 million back then. And Ethereum allows other projects guys to easily create tokens on top of the platform. So, and Ethereum is not the only platform where you can create an ICO token. You can create it on top of other platforms such as like the ones over here, Quantum, NAM, Neo, NXT, Counterparty, and so on. So yeah, year to date, from January to September 2017, we have seen close to $1.5 billion raised via ICO. It's pretty crazy stuff. Some of the notable ICOs this year has been Tezos, raising $232 million, Bancor, $153 million, the DAO, $152 million. It's very interesting, the DAO. We'll touch about it sometime later on if you have time. This was the reason why Ethereum split from Ethereum to Ethereum Classic. Status raised $95 million, 10x, 83. If you look at it, in the early days, Ethereum only raised $18 million back then for something that is really revolutionary. Most of these ICOs, a lot of them are illegal securities disguised as tokens. But that being said, there are some tokens that are actually legitimate, where there's no other fundraising ways besides doing an ICO. An easy way to decide whether an ICO is a securities or not is to basically follow the Securities Exchange Commission rules, which is the Hobby test. And it says there are basically 4 determinants whether an ICO, to test whether an investment is a securities, and it falls under the Securities Act of 1933, which says that it is a security if there is an investment of money, there is an expectation of profit from the investment is in a common enterprise, and the profits come from the efforts of a promoter or a third party. So I guess a lot of people here are also interested in ICO. If you're interested in ICO, it's this big red line here. There are many scams in the industry. Please stay away from them unless you know what you're doing. I'm going to get to really basic stuff here, like Bitcoin, blockchain 101, and like simple questions like, how do I buy Bitcoin? So there are basically 2 ways to buy Bitcoin or Ether, if you want to think about it. Essentially, you can buy it from an exchange or from peer-to-peer marketplaces. So one of them is in Malaysia, the exchanges are Luno or CoinHako, but be aware that a lot of these exchanges, they shut down it's not shut down, their bank accounts get frozen by banks fairly frequently. At this point in time, you'll see that Luno was down for quite some time in Malaysia, and then CoinHako was down too, because of this anti-money laundering, know your customer, anti-terrorism financing laws and all. If you look at the other way to buy Bitcoin is via marketplaces, local Bitcoins and Remitano, two such platforms, and just be careful when you trade with them. Be careful of scammers on peer-to-peer marketplaces. If you want to buy like Litecoin, Monero, and all the other coins, like use Poloniex, Shapeshift, Bittrex, Kraken. Again, never ever store your coins on these cryptocurrency exchanges. The analogy that I'd like to use is that cryptocurrency exchanges are basically like money changers. See, if you want to go to Singapore next week and you want to change 1,000 ringgit to Sing dollars, you go to a money changer, give your 1,000 ringgit, and get your $300 back, and you get it out of the money changer ASAP. It's the same for altcoin exchanges. You put your ringgit in there, and you get your Bitcoin and get it out of the place ASAP. You don't tell the guy like, okay, I'm going to Singapore next week, but like, here's 1,000 ringgit. I'm going to change it right now, but keep my 300 Sing dollars till I go to Singapore next week. I'm going to collect it from you, because you don't trust the money changer, because the guy will run away with your money. So it's the same case here. Most of these exchanges, you are basically trusting them with your private keys, and when you trust somebody with private keys, you never know what's going to happen. And if you want to get involved in blockchain and cryptocurrency or Bitcoin, like the one thing that you need to figure out is how do you store your coins safely. Bitcoin is not like any other investment asset classes. It's a decentralized system. There is no centralized entity. There is zero consumer protection. If you lose your coins, you lose them forever. One of the main attributes of Bitcoin is that, or in blockchain technology, is that transactions are non-reversible, meaning once it is transacted, there is no way to reverse it, unlike credit card transactions, where if somebody makes a fraudulent transaction, you can reverse that transaction. So if you were to make a wrong transaction to somebody, there's no way to reverse that. You lose your coins forever. So similarly, if somebody stole your coin, you lose them forever. So that's why it's like hackers' best place to hang out with, because so many places to steal your money. So if you are looking to store Bitcoin, I highly recommend you to buy a hardware wallet. So Trezor, Ledger, KeepKey, Digital Bitbox are some of the hardware wallets that I highly recommend. I've actually done a review of Trezor, Ledger, and KeepKey. All you have to do is just Google CoinGecko, Trezor, and you see a long article on what do I find of this Trezor, of these devices. They're about $99 US, about 400 ringgit plus. Get it from the online shop itself. Don't buy from someone else. It may be tempered. Those days, basically for blockchain and cryptocurrencies, we generally want to keep our coins away from the internet, because once something is connected to the internet, you're opening yourself up to a lot of other attack vectors. So if you're really paranoid, actually this is for like people running Bitcoin businesses. You might want to put coins in offline storage. So like, what I mean by offset storage is that set up a computer without any access to the internet, plug in, install a new wallet, create a new private key, and then send your coins to that address. A lot of you will be using online wallets. So there are two kinds of online wallets that you need to be aware of. One of the online wallets where you control the private keys, so you are your own bank. But when you're on your own bank, you have to be careful of security as well. You have to make sure you back up your seed passwords properly for you to recreate the wallet again. The other one is you trust a third party to store your keys. So if you have to use an online wallet and you have to trust somebody with your private keys, I only recommend Coinbase. It's one of the simplest way to store your Bitcoins. And it's not just that. Actually, the reason why, if you have to trust somebody your Bitcoin, and if you really have to trust somebody with a Bitcoin, I would recommend Coinbase, because Coinbase raised $100 million and has a valuation in Series D, and has a valuation of $1.6 billion. So, and actually most of their coins are insured, unless you lose your password. If you give somebody access to your username and password, you will not be insured. So highly likely that if Coinbase is at fault and they lose your coins because of some hacking incidences on their site, then you will get compensated for your coins. It's pretty interesting. Electrum wallet and Copay, some of the desktop wallets. If you're thinking of storing your coins on your own computer, don't be this guy who bought 1,400 Bitcoin when it was $25 in 2010, put in hard drive, forgot about it, threw it away, and realized that now it's worth $4 million. So yeah, there's one thing like all these things about this Bitcoin wallet. So yeah, if you're interested in buying altcoins and ICO, like, again, highly recommend Trezor. Yeah, and if you're looking at Ethereum, I recommend my Ether wallet. If you're looking at buying ICOs, don't never ever send your ERC20 tokens to exchanges like Poloniex or Coinbase. If you send it to the Ethereum address, you'll never get it back. So yeah, and be very careful of phishing attacks. So I was doing research yesterday. I was trying to find a logo of my Ether wallet. So I typed on Google my Ether wallet, and what I found was an advertisement on Google saying that it's an address to a fake website that I believe if I click on it will look and feel like my Ether wallet, but once you fill in your details and password, I will guarantee you that your funds will be lost. Always make sure that you have myetherwallet.com, bookmark it, and make sure you only access it from the link that you save. It's non-trivial. I mean, a lot of you got in this space like recently, and you don't realize what the risk that you're taking. We have seen way too many hacking incidences, exchanges crashing, coins lost. It's crazy out there. So a lot of people ask, is this a good time to buy Bitcoin, Ether, altcoin, ICO? Basically, I guess the thing to go back is to look back at the three functions of money, which is basically a medium of account, unit of account, and store of value. Does Bitcoin or blockchain Bitcoin or cryptocurrency satisfy all these three properties? So let's start with medium of exchange. Medium of exchange basically says that basically allows people to solve the double coincidence of one. So I want to buy something. Without medium of exchange, we basically have to barter trade. And does Bitcoin solve the problem of barter trade? Yeah, it does. So in that sense, yes. Does it solve the unit of account problem, which basically put a price onto something? Yes, it does, because Bitcoin is divisible to 8 decimal places. So yes, you can split Bitcoin up into, you can pay someone with a fraction of a Bitcoin. Is it a good store of value? This is debatable. So one of good function of money is that you retain value over a period of time. So that, of course, you can say that Bitcoin used to be like $1 or $100, and now it's like $4,000. So yes, of course, it's a good store of value. Yeah, but what if you bought Bitcoin 2 or 3 weeks ago when it was $5,000? Is it a good store of value? I don't know. You probably lost 20% of your value by now. So I would say nope, it's not a very good store of value. Depends on when you buy. Is it a good investment asset class? General answer, I would say no, unless you know what you're doing. As I said, security is in your own hands. You have to be your own bank. You have to take care of your own security. There's zero customer protection. Too many exchanges have failed and ran away with their money. If you lose your coins, you lose it forever. Prices are highly volatile. It's very common for Bitcoin to lose 20%, 30%, or any other altcoins to lose 40, 50% in one day. In fact, one of the things that I'll show you a graph later on. And it's very highly uncertain regulatory environment. Just last week, China announced that all exchanges in China will be banned. 2 weeks ago, China announced that all ICOs will be banned. So prices are highly volatile and sensitive to announcements from central banks in the world. So this is a price history of Bitcoin. It's not from the start because it will be close to zero, but I put it out from around July 2013 up to today. It was barely anything, $100 or so for a long time. It was pretty crazy in February 2014, January, February 2014 when everyone just got into it and Bitcoin price hit $1,000. And then Mt. Gox got hacked. Those who had coins there lost all their coins, so never ever store your money. And then you see here, January 2015, Bitstamp got hacked. You see again, August 2016, Bitfinex got hacked. Actually, there's a lot more exchanges getting hacked, but I just didn't plot it into the graph. Actually, if you look at January 2014, it was $1,200. Towards January 2015, it was a downtrend throughout 2014. So to say that Bitcoin prices will go up, 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 and up, nope, it does not always happen that way. Up at one point, sometime in 2015, it was at its lowest, close to 200 to 300 US dollars per Bitcoin. So if you bought at a peak at $1,200, you would have lost close to 80% of your value. And then it slowly picked up and gone up, and now it's pretty crazy times again. I guess a lot of the price has been, the positive sentiment has been caused by the agreement in May 2017, which is a SegWit 2x. This is pretty detailed stuff, but basically there was a scaling issue in Bitcoin, and for 2 years, they couldn't agree on a consensus on how to scale Bitcoin. And in May 2017, they found a consensus among all the players, stakeholders in the ecosystem. And August 2017, there was a split between Bitcoin and Bitcoin Cash. People were uncertain on how things will go. The split went well because it's the first time Bitcoin, and confidence went up. But as you can see, it hit $5,000 and it went down. So this was due to China announcing crackdown on the crypto market. So very, very volatile industry. So a lot of you will probably ask, okay, despite me telling you not to buy Bitcoin, you will still buy Bitcoin, because I only say buy Bitcoin if you understand what you're getting into. A lot of people buy it without understanding the risk that they're getting themselves into. So if you have to choose one, remember, it's highly risky. Hacking, price volatility, regulatory uncertainty. But if you were to still get into it, I would follow Fred Wilson's advice on how to get a position into cryptocurrencies. So Fred Wilson is one of the top Silicon Valley investors. It's a VC, and what he does say is, okay, I changed a little bit. He has an article, but I put in some of CoinGecko's suggestion advice on how you do it. So what I would do is, again, this is not financial advice. You consult a financial advisor. But what I would do is I would determine my net wealth and say assets minus liabilities, and your net wealth is let's just say 100,000 ringgit. And decide on your risk profile, whether you want to get into crypto, is it 1% or 10%? So, okay, let's say 10%. And then if you want to decide you want to buy 10% of your net wealth, that's worth 10,000 ringgit. Don't go all in and buy Bitcoin in one day. You might buy Bitcoin when it's $5,000, then you lose money, of course. But dollar cost average over a period of 1 year. So dollar cost averaging is basically an investment strategy where you buy a fixed amount every month regardless of the price. So for example, if you decided that you want to buy like 10,000 ringgit worth of Bitcoin, so what you do is on the first of every month, you buy, and you want to dollar cost over a period of 10 months. So what you do is buy 1,000 ringgit every month on the first for 10 consecutive months, and over a period of 10 months, you get a position of 10,000 ringgit worth of Bitcoin. So that's how I do. And then if you were to get into crypto, I've seen too many people asking me questions on, should I buy this ICO? Should I buy this altcoin? Should I buy this, that, and all? It's like, no, you should not buy all these things. If you were to get into it, please only buy Bitcoin and Ether for a start. Probably keep 90% of your portfolio there. That's why number 4 is there. Learn, and learn. Once you're more confident in it, then you can probably look into the other altcoins. Altcoins and ICOs are very speculative. You need to know what you're getting into. Of course, the rewards can be great, but if you don't know what you're getting into, you're essentially gambling. So be careful. Learn, and learn. So once you're more careful, then yeah, you can be there. So only buy cryptocurrencies if you know how to secure your coins properly. There's no point making 1,000% return or 20,000% return, whatever numbers, if you don't know how to secure your coins, and within an instance, you can lose them all when an exchange get hacked. If you only buy Bitcoin if you can stomach high price volatility, buy cryptocurrency if you can. It's very common for price to go up and down 50%. If you need to get married next year and you need 20,000 ringgit, don't put all your money in here. That's quite foolish. Have a mid to long-term investment horizon. What is mid long-term? Like anywhere from 5 years or so. If you have extra cash and don't need anytime soon, don't buy altcoins or ICO until you got your first Bitcoin or Ether. ICOs are highly risky products, and yeah, learn or pay a large tuition fee later. So yeah, I guess there's a lot of new guys here. So how do you get involved? So there's the Malaysia crypto groups, Bitcoin Malaysia #1 group on Facebook, Bitcoin Sarawak Facebook group. There's a G1 Telegram group that's very active. You can get a lot of information on scams. There are so many scams out there in the market. I don't know where to start. Like too many scams, and Malaysia is one of the hotbed for scams coming out from the crypto space. Of course, because everyone wants to get rich quick. So be careful of these scams. Learn. So what can you do else? I mean, otherwise you can also learn and be an expert and teach others about blockchain technology. Trade cryptocurrencies for fun, but be careful of scam coins, ICOs, pump and dumps, exchange hackings. If you're a computer programmer or computer science grad, read the Bitcoin code base, read the white paper, and there's a lot of tools and apps that you can build. Blockchain technology is pretty much in its early days. It's kind of like the internet in the 1990s where nothing is being built yet. So there's a lot of opportunities for you to build tools to make things easier in the space. If you're an economist like me, so observe the cycle. There's a lot of game theory at play. If you can take a look at Steemit if you want to. It's a decentralized Reddit that if you write articles, you can get paid via Steemit tokens. If you have a legal background, I think this is very interesting opportunities. Ethereum allows for a lot of smart contracts out there, so a lot of legal interpretations will be required. This is a growth area for people who understand law and technology. ICOs, for example, are highly structured products. You need to know your legal stuff before you even launch an ICO, and lawyers who understand them will stand to be rewarded very well. And yeah, blockchains are still in its POC stage, so yeah, many opportunities out there. Yeah, I guess that's about it so far, about 40 minutes. So if you ever need to ask us any more questions, you can always ping us on Twitter at TMLee or at Bobby Ong. So yeah, I guess we'll open up the floor for questions and all.
Two questions. Yep. First one is that you guys mentioned there's going to be a hard cap of 21 million Bitcoin operatives. How many are there in the market today? And number two, Bank Negara today just came out to say that they're going to try to regulate Bitcoin. What do you think their stance on it will be?
How many coins are there?
Okay, we'll repeat the question. So 2 questions. How many Bitcoins are there in circulation at this point in time? It's about 16 million Bitcoins or so. About 2/3 have been mined, 16, 17 million. Can't remember the exact number. It's around there, 17 million. 2/3, roughly 2/3 have been mined. For the Bank Negara's statement on regulating cryptocurrencies, I'm not going to make a statement on it, but I guess let's watch the space. Let's hope for a progressive regulatory climate from Bank Negara.
But I can add on something to that. So regarding that, right? So in Japan, the central bank they don't recognize Bitcoin as a legal tender, but they recognize Bitcoin as a payment, as a way of receiving payment. So we're not exactly sure like how things will pan out here, but if they were to follow Japan's footstep, it's actually quite positive, because then you can find ways to spend Bitcoin, and also maybe the exchanges here will be regulated in some sense. Yeah. So a straight up ban will be not beneficial for everyone, I imagine. Yeah.
Sorry, thanks for that presentation. I just realized you were mentioning a lot of peer-to-peer transactions
Right.
as a start for this blockchain and Bitcoin. Do you foresee like most of the enterprises like industry all that is going to adopt Bitcoin as a practice as well? Like aside from what Bank Negara stand is all that, do you foresee currently they're going to use it in like use cases in industries?
So the question was, aside from financial transaction,
No, it's just like for investing and just for like
right.
peer network.
Yeah, so will industry be able to apply blockchain within their enterprise or within their own like industry, aside from finance and peer-to-peer transaction, right?
Yeah.
Yeah.
That as specific example maybe.
Right. So I think that is definitely going to happen. So if you remember the slides I showed you earlier, there is smart contract platforms, which is basically a programmable world computer. So in an enterprise, if you have a setting where you want to track supply chain or stuff like that, you can potentially use Ethereum or some of the smart contract. You can actually use Bitcoin to do it as well, but it's just not meant for that. And yeah, you can actually use this blockchain for that purposes. Like as you can see, enterprise, right? So there are actually a group of people, but mainly most of them are banking institutions. But I would imagine in time to come, there may be consortiums of people in the industry that will share one private blockchain. So imagine right now, most of the data are stored in a central server. Like you have to trust that one guy. But imagine you have like 5 competitors and all of you want to share data with each other. You can share a blockchain together, which is private. So that would definitely be on its way, aside from peer-to-peer transaction. Yes. Yeah.
Just elaborate more on how smart contracting actually works.
So okay. Yeah, I have a slide here. All right, so the question was explain how smart contract kind of work, right? So in the Bitcoin world, as I've mentioned earlier, we have these ledgers that are sitting around, and basically what happens is you can keep sending transactions, and all these transactions gets recorded in the ledger, and all of them will stay in sync, right? Whereas, for example, Ethereum, which is a smart contract platform, you also kind of have a ledger, but these ledger are generic. Like they don't just store like financial transactions. Basically, you can actually write code. Like say, for example, you write actual code, and then you put it in the transaction and send it off to the network. So all these nodes will actually be able to run the code that you just wrote. So if somebody wants to use your app that you uploaded to the blockchain, all they need to do is they write a transaction to the address of your app, and they can fire it off. So the difference with the current model is when you write an app, you send it to a central app store, for example. So anybody wants to interact with it, they have to download it from the app store. For this case, there is no app store. The app store is within the network everywhere. So essentially, it's a virtual machine that runs all over the world, and you can use any of them by paying some amount of Ethereum. Yeah. So, yeah. So smart contracts are actually decentralized apps. Decentralized apps is the bigger umbrella of it. Smart contract is one of the few things that it can do as well. Yeah. Sorry? One line? What's that? I don't remember. Okay. Which one? I don't know. Yeah. So
Fine, right? We can explain the.
yeah,
Let's go through the Bitcoin Cash. And
yeah, I'll go
Bitcoin
through
block
something
first.
because I think we received the Q&A from
Yeah.
Nikita, and there is some interest in terms of why there is Bitcoin and Bitcoin Cash and Ethereum Classic, right? So yeah.
Yeah, I have a similar question.
Oh yeah.
What's your opinion about the SegWit? Recently they give the SegWit,
Right.
right? So, what could be next? There will be any fork or
Uh,
your opinion?
Let's go through this first, and then we'll get to this.
Yeah, we'll get to that in a bit. Okay, just to make sure everybody understand what SegWit is. Yeah. Okay. So so the Bitcoin has its blockchain, right? That is ever growing, expanding, and the whole network keeps that in sync. And Bobby mentioned earlier there was a scaling debate that's been going on for 2 years, and they couldn't come to a consensus. So the scaling problem was that Bitcoin can only do 7 transactions per second, whereas Visa can do like millions of transactions per second. So you can see the difference here. Like Bitcoin is really not prime for like for the world to use. So what happened was we end up with 2 camps, right? So one camp decided that I think we should rearrange how the data is packed in the block, and that will allow us to put more transactions into that same amount of block, right? The other camp says that the block should be bigger. The block size should be able to pack more transactions just from the get-go, right? And the problem with Bitcoin is that, like I said, it's designed to be very difficult to upgrade. You kind of need to convince a lot of people to upgrade the software in order for the patch to take place. So they couldn't come to a consensus, and what happens is the only way out is for Bitcoin Cash to update their software and mine their own blocks. So they actually continue mining it from this point, and so we'll have 2 versions of Bitcoin. So that's why there is a Bitcoin Cash and Bitcoin. And as you can see here, at this split, that means Bitcoin Cash is inheriting all the ledger history of Bitcoin until this point. So if you have 10 Bitcoin until here, when you open your wallet the next day, you realize you have 10 Bitcoin and 10 Bitcoin Cash. Your money just kind of doubled, right? So another similar incident was that for Ethereum. Ethereum also had a single blockchain, but in May 2016, the DAO token was launched. And they were able to raise like $168 million, one of the largest crowdfunding ever. And in June 2016, somebody was able to exploit the contract. So DAO token is actually a smart contract, and it's written with some bugs in it. And once you put it out to the network, it's also very difficult to make changes. So and then somebody found the problem, and they exploited it, and they stole $60 million worth of Ethereum, which is a lot at that time. So the balance resided on the ledger of Ethereum, and so it is a problem, right? So so much money got stolen, and it is going to be a systemic risk to the whole economy here, and there's going to be a loss of confidence in the Ethereum network. So the core developers, the people who created Ethereum, kind of decided to change the rule a little bit. But the problem is that when they change the rule, they have to kind of create a hard fork. So the rule change permits the victim to get a refund, to return the money back to the victims of the hack. So it's kind of as though the hack did not happen. So obviously this is going to be a problem because blockchain is supposed to be immutable, if we talked about it earlier. And the fact that the blockchain just changed means that there is something like some part of the community is not happy with the fact that there is someone who can make like a change like that. So Ethereum Classic stays true to the original Ethereum ledger where the hack actually occurred, and that's why you have this split as well. So both of them kind of do the same thing, but now Ethereum is getting a lot of development work done because that's where all the core developers are working on, and Ethereum Classic has support from a different group of audience who thinks that blockchain shouldn't change rules just like that. So in terms of answering your question, right? So when he asked about SegWit 2x, SegWit was actually the reason why this split taken place. So SegWit is the proposal to go into this direction, and the bigger blocks is the proposal to go into that direction. So the question was, will we see another split in the future? We actually might, because if we don't see, so what happens is the SegWit agreement says that the first part of the phase is to introduce different ways of storing the data in the blocks. The second part, which is upcoming now, is to increase the block size by to 2 megabyte. So it's different than Bitcoin Cash because Bitcoin Cash allows the miners to vote for a bigger block. Yeah, they're going to start off with 8 megabyte. So what happens is that it seems that for any kind of consensus problem, we may see a similar scenario like this. And the only people who gets to judge them is the free market. The free market would decide, which Bitcoin is powerful by, buying the coins and stuff like that. So, yeah, we may see more splits in the future, not just for Bitcoin, for other coins as well, if there is going to be a debate. And it may be a good thing, actually, because otherwise we'll have the same incident like Bitcoin where we're stuck for 2 years and we're not going to be able to go anywhere. Yeah. So, yeah. Otherwise, we can chat later. Otherwise, yeah.
Any questions from Facebook? Anyone saw a question from Facebook? Let me take a look. Oh, everyone's enlightened.
Yeah. Sorry. Yes. Yeah.
Okay, just one curiosity I have because like you have about so many coins in the market every day that people are trying to develop all that. So it's like trend. Are they going to do more blockchains to protect all these Bitcoins market, or the ones that Bitcoin trend is still going up in the new iteration because there seems like a lot of hype in the market.
Yes. Yeah, that's definitely the case. So the problem why we have so many coins is because when you want to make changes to Bitcoin, it's very difficult. So the only way is to create another blockchain, right? But what we are seeing now is that, so if you look at the Bitcoin split, right? So we split it into Bitcoin and Bitcoin Cash, yes. Bitcoin with SegWit implemented, so the whole idea of how Bitcoin will scale without increasing block size is to increase the transactions off the chain. So imagine you have a blockchain who can only handle like 7 transactions per second, right? They're going to introduce more layer on top of it. It's kind of like your internet, your TCP IP being the lower level, and we layer more stuff on top of it, like HTTP and so on and so forth. So that one of their plan was to create something called a side chain. This may be a bit advanced, right? But a side chain basically means that you can create another virtual blockchain that packs on top of a Bitcoin. So when you want to try something new, you can kind of like create another like smaller blockchain on top of Bitcoin where you can actually swap your currency back and forth and try something new. If it doesn't work and it fails, you can return it back to Bitcoin. But that technology will only come in like maybe 1 or 2 years later, even for wide adoption. So at the moment right now, the only way to try something new is to create new chains. And that's why we are seeing so many different currencies. And each of them stand a chance of becoming the currency of the cryptocurrency. Because Bitcoin itself has its own setbacks. Like it's not perfect in every way. So there is its risk and there's a chance that other currency may overtake its position as well. That's why there is this speculative race that are kicking in. Yeah. So does the value right now reflect the true utility of the coin? Yeah. Not sure, right? Yeah.
So question on how blockchain affect banking sector. All right, so there was a question on Facebook that says how will blockchain affect the banking sector? So I'm going to run through very quickly to the slides. The main difference with blockchain technology and the start is there's a removal of the middleman. So I'm not going to go this into very detail, but basically pre-blockchain days, you will need a central intermediary to get any transactions done to send value anywhere in the world. Where's the other slide? Post-blockchain days, where's the other one? Never mind, just put that slide there. Okay, put the slide 3. Yeah, pre-blockchain days, you need a central intermediary to where's the slide? The one with the central intermediary. Yeah. Pre-blockchain days, you need a central bank. You need a central intermediary. This can be banks, it can be stock exchange brokers, and all to transfer values from one party to another party. You need a trusted entity to transfer values. With blockchain, this offers an opportunity to remove the middleman from the space. How will this pan out in the banking sector? a lot of things may change, but will it change fast or not? Because it's a very regulated environment, we don't know yet. But what we are seeing is that technology allows for the removal of middlemen from all entities that transfer values. So yeah, that's pretty much a short answer to it. There's another question from Branwen on how to make sure people won't use Bitcoin for money laundering. So basically, one of the main things that one of the main ways to regulate cryptocurrency is basically via the exchanges level. So when you sign up for an account on Luno or CoinHako, they will require you to give your documentations, your identity documents, your photo, your passport or your IC, and once you give these documents, you will know that how much Bitcoin you bought and how much Bitcoin you sold or how much Ether you sold. If you have a lot of weird financial transactions, then the bank negaro and central banks will regulate the ecosystem via the exchanges in general. And actually, if you look into Coinbase, they're actually taking a lot of active ways to stop weird transactions coming in. So if you had, because Bitcoin transactions are, you can trace back the coins from its source. If you actually went and played some online casino games and send your Bitcoin to Coinbase, they actually will freeze your account, and because of anti-money laundering regulations. So in the future, Bitcoins are not fungible. So if the coins, you can trace the coins back from its source, whether it's a stolen coin or if it's from you use the coins to buy drugs or use the coins to gamble online in some casinos. This can be traced, and we will see more checkpoints in the future, I believe, where due to regulations, exchanges and other platform providers may block accepting certain coins from users. Yeah, that would be the answer to it. Yes?
Just following up that topic. Normally when you have issues of money laundering, even terrorism financing, seizure is the traditional, most conservative way
Yep.
of remedying it. How does that harmonize with the immutable aspect of cryptocurrency?
If you send questionable funds to Coinbase just freeze your funds, and that's it. You lose your funds, pretty much. Yeah, that's how they are taking it. So that's why there's a group of cryptocurrency guys who don't really trust Coinbase anymore, because some of their accounts have been frozen due to issues like this. Yeah. Yeah. Any questions? Everyone's enlightened, I guess. Yeah.
I've read there are several implications of blockchain on IoT. What is your stance on that?
Okay. So the question is the implication of blockchain on IoT. I'm currently monitoring two things for IoT. The first one is, so remember I mentioned Bitcoin, after the split, they did this software upgrade which allows them to pack the transactions better into the block. That actually also solves a certain bug in Bitcoin that allows them to build layers on top of it. And that layer on top of it is called, one of them is called Lightning Network. So a Lightning Network allows you to send transactions off the blockchain. So you can send like micropayments, like 0.00001 Bitcoin. And you can send it 1,000,000 times, and you won't have to pay the fees that everybody is paying, and it's almost instant. So people are speculating that Lightning Network thing may be a solution for IoT to transact with each other. Because if you use a blockchain and transact, it's going to be very inefficient and very expensive for machines to trade with each other. The second one is there's a new cryptocurrency, it's called Iota, IOTA. And essentially that cryptocurrency is also decentralized, but it doesn't use a blockchain. It uses something called a tangle, which you can read out more about it. And the whole idea of using that structure is to create, to get people to send transaction with the same attribute where it is fast, it's cheap, and you don't need miners to like support the network. So I would say if you're interested in IoT, you want to look into Iota and possibly Lightning Network, because I think these are the solutions for machine economy, basically. Yeah. So that would be something. Yeah. Right.
There was a question on Facebook from Keyan on why would someone run its server as Ledger? What's the reward? So I guess this is a question on mining. So why would someone mine Bitcoin or other cryptocurrencies in general? So Bitcoin is a SHA-256 hash, has a SHA-256 hash. So the rules of the monetary supply rules of Bitcoin is such that there will be 21 million Bitcoin ever be created in the year 2140. The first 4 years of roughly the first 4 years of the Bitcoin ecosystem or Bitcoin history, every block that is being created, which is like roughly every 10 minutes, the miners will be rewarded with 50 Bitcoins, and the next 4 years will be 25 Bitcoins every 10 minutes. And now we're in a third phase where every 10 minutes there will be roughly every block there will be a 12.5 Bitcoin reward. So it's increasing at decreasing increasing at a decreasing rate. Yeah. So that's roughly how the monetary supply rules work. Basically, miners make money from two ways, which is the block reward fees, which is the 50, 25, 12.5 Bitcoin fees, and the second one will be transaction fees. So and because the Bitcoin ecosystem is controlled very much by the miners, and this is why this has been driven with the scaling debate. The miners want the blocks to be full so that they can increase their transaction fees. And there's a group of other people who wants low transaction fees and allow it to be a large payment network for everyone. So essentially what we're seeing is that two different philosophical, political camps on how we should grow Bitcoin in the future. I mean, this different for all the other cryptocurrencies or other, but most of them roughly work around the same way as Bitcoin. There's a group of, this is known as a proof of work kind of cryptocurrencies where you have to do a proof of work. There's a whole section on whole group of cryptocurrencies known as proof of stake, where instead of earning mining rewards, you earn staking rewards. So there'll be a section of rules, say there's 1 billion coins and there's a 3% staking reward, for example. So if you have like 10% of the coins in the ecosystem, say there's 1 billion coins in the circulation and 10% is owned by you, you can stake them into the network and you can collect the 3% transaction fee. And that's how the network is secured. So there's no waste of electricity, power, and so on. Yep.
Yes.
More questions.
Okay. So the question is, when the Bitcoin transaction takes place, will the fees be in the currency as in fiat, as in like US dollars, or so the fees are actually yeah, right. So the fee is actually quite arbitrary. It actually depends on how much fee the network is in. So it's kind of like a bid. So because let's say the network has only 10 transactions, even if I give a low fee, the miners have no choice, but they will pick it up and include it into the block, and they will collect my low fee. But right now, Bitcoin is really popular, that you see like hundreds and hundreds of transactions keep coming in, and all these people are actually bidding a higher price. So in order for your transactions to be favored by the miners to include into a ledger, you have to kind of increase your fees. But of course, there is a standard, like there is a sort of like average number that you can put that will give you a higher confidence in terms of getting the miner to pick it up. And that fee is actually denominated in Bitcoin. It will be in like 0.0005 Bitcoin, for instance. And if the Bitcoin price is high in dollar term, then your fee is also equally high as well. Back in the past, your Bitcoin fee is like 20 cents, 10 cents. But now, even for a small amount, you have to pay like $5 or $4 because the network is kind of full at the moment. There's too many transactions going in, and there's no more space, which is why the scaling initiative is needed. Either you have a bigger blocks where you can process more transactions, your fees will go down, or you push all the transactions off the blockchain, and your fees will go down as well. Yeah. So that's how it is. Yeah. So the reason why we think in terms of dollar is because dollar is the de facto currency. But in a utopian world where dollar doesn't exist, then you wouldn't think of it in terms of dollar. Like you would just think of it in terms of like whatever numbers that are written here. Yeah. Yeah. So I hope that answers the question. Yeah. So, yeah.
Guys, been following CoinGecko for a while now.
I think right now we are actually solidifying our platform. But at the same time, there's a few things that we are planning to do. One of it is to also like improve the way for people to like track the coins, that have a better portfolio management. Also have a way to give more like visualizations to the market. And we're also trying to conduct some experiments. So I think like the blockchain, with all this development coming in, is getting much more exciting. So we have our own like sort of experiment where we try different things like Lightning Network, new cryptocurrency, run the network and see how it goes. So that doesn't really like directly impact what we are working on in CoinGecko, but it may open up new possibility when this protocol like takes on. So we want to keep in the loop, so we experiment with those set of tools as well. Yep. Okay, so I think we're good. Right? Yeah. Okay. All right. So thank you for your time joining us, and hopefully you guys learned something new. And if there's anything, just feel free to let us know. Yeah. All right. Thank you.
This is last closing off. Thank you, TM and Bobby. That was awesome. I definitely learned a lot. Just so you guys know, we do lots of webinars like this one on really any topics that people want to learn. Feel free to write in to info@futurelab.my if you guys want us to try to find someone to talk about a particular topic. Just let us know and we'll try do our best to help you out. All right, thanks.